Good morning and welcome to Stock Market Today. It's Friday, September 27th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email to follow along with this show, as well as receive daily stock ideas for you to consider in your inbox every trading day before the market opened. So U.S. equities finished lower in Thursday's trading, with small caps underperforming. Treasuries were stronger, with the curve flattening. The dollar was stronger versus the euro and yen. Gold finished up 20 basis points. WTI crude settled down 10 basis points, but off the worst levels of the day following news that the U.S. is sending troops to Saudi Arabia. As we get to the desk here this morning, S&P futures are up 30 basis points to start the day. Asian equities were mostly lower overnight, though China did close slightly higher. European equities are trading higher here this morning. Treasuries are weaker across the curve, though yields are still down for the week. The dollar is firmer versus the yen, but weaker against the euro. Gold is down 1%. WTI crude is trading little changed here this morning to get us going on the final day of the week. So here's the S&P 500. Not a ton has changed, right? Still holding the top of the support zone that we've been highlighting. 2,900 to 2,950 is the key support zone. We've been talking about it for weeks now. And what we've been saying is we want to see that zone hold, in addition to the RSI holding in bullish ranges. So far, that is the case. RSI holding the 50 mark, right? 40 is really the lower bound of bullish ranges for the RSI. It's always really important to know the characteristics of your indicators, right? A lot of people look at RSI and they say 70 is overbought and 30 is oversold. But in trends, those levels shift. And in a bullish trend, you never really get to oversold, right? You generally bottom out around 40 and you routinely become overbought. That's a sign that there's solid momentum behind the trend. So that's what we're looking for here. We're looking for RSI to hold bullish ranges to tell us that this bigger picture uptrend off the 2018 lows is intact. So far, so good. Add to that the fact that Chaikin money flow is bullish, and odds are the trend is going to continue. Is that guaranteed to happen? Absolutely not. But we want to take a weight of the evidence approach. So far, support is holding. So far, RSI is holding in bullish ranges. So continue to watch that dynamic closely. Our market in a minute now. What are we writing about in the note today to Chaikin Analytics clients? Well, major markets in the U.S. are holding key support levels. It's not just the SPY. The Qs are holding support. We'll take a look at that. IWM is holding support. We'll take a look at that. Now, their relative strength is a little bit of a different story. Small caps continue to be underperformers, and Qs are actually seeing their relative strength wane. We'll look at that a little bit later in the show. Now, important test for semis today following that report from Micron last night. Micron trading lower this morning by about 6%, also weighing on some of the semi names levered to memory like AMAT and Lam. Major themes continue to point to risk aversion, but what we're talking about in the note is that momentum is showing early signs, and I stress early signs of shifting. Futures do point to a higher open here today, as we said. Let's take a look at the power bars now. Major indices, Dow shifts back to bearish. 5 bearish stocks, 4 bullish stocks as the group lost 25 basis points yesterday. SPY, S&P 500 down 20 basis points yesterday. 115 bulls for 88 bears. NASDAQ is even, 19 to 19 bulls to bears. It was a slight underperformer yesterday, down 34 basis points. And there's that small cap, right? We've been talking about small cap underperformance. Continue to underperform. S&P down 20 bips yesterday. Small caps down over 1%. 609 bullish or very bullish stocks. 356 bearish or very bearish stocks. Bonds higher in price, sending yields lower. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish, but the major indexes are mixed. Turning now to our stock of the day. It's American Home for Rent. AMH is the ticker symbol there, and it comes from the real estate group, and real estate has been an outperforming area of the market. AMH closed at 25.85 yesterday, up 66 basis points, so some nice outperformance. AMH has a very bullish power gauge rating due to attractive financial metrics, strong earnings performance, strong price volume activity, as well as positive expert activity. So they're all lining up in the bullish category across the board. And when we look at the 20 factors, 5 in each of these 4 categories, we come out with that very bullish power gauge rating. So what do we have? A very bullish stock, strong trend, strong industry group, type of name we want to consider, right? The what? What do we want to buy? Bullish stocks and strong trends and strong industry groups. When do we want to buy them? We want to buy them when they are outperforming, oversold with bullish money flow. So that's not the case here for American Home for Rent, right? Stock is overbought, but money flow is mixed. Stock is above a rising long-term trend line and beginning to outperform once again. I don't like the overbought condition, and I want to see money flow improve. The AMH is a name that we've liked. We've highlighted it at around the $24, $25 level a few times in a few different venues. However, now I can't get behind adding to the stock now. If you're in the name, fine, the trend remains in place, but the stock is overbought and money flow is getting a little bit punk. I want to wait this one out a little bit. I'm going to add it to a bullish watch list here today. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days, and quite honestly, not a ton has changed, right? Everything that I've been talking about for the past few days applies today, and basically what that means is defensive posture at the top of the list. Utilities, staples, and real estate are outperforming. Those are traditionally defensive areas of the market, and in particular, the Utes and real estate are seeing a benefit from a continuation lower in rates. But what's interesting to me is that tech is still near the top of the list, and bullish investors want to see tech near the top of the list because it is the largest weight in the S&P 500. But what also is interesting is this is our theme and our thesis since March playing out. In a slowing growth environment, you want to favor yield plays because it's going to be difficult for rates to move higher. So utilities outperforming, real estate outperforming. They're outperforming over the past year, the past 6 months, the past 3 months, doing better than the market. In addition to that, so is tech, and tech is the growth element because in a slowing growth environment, I think investors are going to bid up tech. Now, our thesis on the growth side is being tested a little bit with waning relative strength in the Qs, which we'll look at a little bit later in the show. Industrials, fins, materials, and discretionary middle of the road, healthcare, comms, and there's energy at the bottom of the list, beginning to underperform again. Bearish fundamentals, just continues to be a group that should be avoided. Now, turning to our industry in focus, NYSE Tech Services, which is a bit of a mixed bag, right? We're going to look at the chart, and it's a mixed bag because over the past 6 months, it's actually underperformed by about 2.6%. But power bar ratio is shifting bullish, 11 bullish or very bullish stocks to 7 bearish or very bearish stocks. And remember, the power bar ratio measures future potential. So future potential here is strong. Group is currently ranked in the top half, number 9 of 21 subsectors that we track, and it has moved up 1 slot over the past week. Some of the indicative names there, though. Micron under pressure here today. Let's see how it finishes the day. Intel, semiconductor company, and Activision Blizzard. ATVI was actually my bullish stock of the day 1 week ago in my note to Chaikin Analytics clients. But let's take a look now at the fund itself. Bullish power gauge ETF rating, but the trend is weak. Right? I said it was a mixed bag. Trend is weak as it's below the flat long-term trend line. Stock is an inline to slight underperformer, and it actually looks like the intensity of that underperformance is beginning to pick up. So that's not a bullish sign. Fund is oversold based on our overbought, oversold indicator, or just entering an oversold condition, but Chaikin money flow is bullish. So that, like I said, it's a mixed bag here. I think we have to wait this one out. I think if you're going to look within the holdings here, you really need to have an eye on stock selection and focus, on these 11 names and disregard the rest. Look for those names when they are oversold, outperforming the market, and have bullish money flow. Let's take a look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. ConAgra up 3.7% following their earnings. Whirlpool caught an upgrade to send that stock higher by nearly 3% on the day. AbbVie caught an upgrade on Wednesday night, followed through to yesterday's trading, up 2.7% on the day. L Brands up 2.5%. Now with a neutral rating, the stock's been a massive underperformer, but maybe things are starting to change there. Might be something to keep an eye on. And KIM, Kimco, REITs were strong. Rates were down. REITs were strong. KIM up 2.4% yesterday. On the loser side of the board, CCL reported earnings, disappointed the street, down 8.5%, and that led to some downgrades last night and today. Nectar reported some data that the market didn't like, down 6.6%. Also, it is being replaced in the S&P 500. CNC is divesting a business. That stock traded lower by 4.85%. E-Trade, ETFC, down 4.8% as Interactive Brokers announced a new product that is very Robinhood-like in nature. Commission-free trading weighed on some of the online brokers, in particular E-Trade, down 4.8%, and FLR, nothing company-specific. That name's been volatile, down 4.64% yesterday. Let's get into the key charts now. As I said, today is going to be a key test for the semiconductors. Here's SMH. This chart, you know it well. It's ingrained in your memory at this point because we look at it all the time because it is a key data point for the market. SMH relative to SPY, trading up here near 2-year highs, above the 200-day moving average. RSI shifting into bullish ranges, so lending a momentum confirmation. And on an absolute basis, SMH is continuing to trend higher here, on the verge of breaking 2 new highs. However, today is going to be a key test. As I said, Micron trading lower by about 6% here in the pre-market following their earnings report last night. That's weighing on some of the bigger names in this group like Lam Research and AMAT. So it is a key test for semis. If this is the sign or the start of weakness for semiconductors, that would be a headwind for the overall equity market. There is a positive correlation between this ratio, this line, and the S&P 500 itself. When semis are outperforming, it's generally bullish for the market. When semis are lagging, that's generally a headwind for the market. So today is going to be a key day for the semiconductors and therefore the equity market. FANG stocks are also under relative pressure. This is a custom index that I built looking at Facebook, Amazon, Apple, Netflix, and Google. And you can see for over about pretty much a year, actually over a year, we've just been in this consolidation, right? And we're holding between the slightly rising 200-day moving average and resistance here at the top end of the zone. Right? Fine. What's interesting to me is that the market has pretty much been in a sideways consolidation in line with these generals, right? What the generals are doing, the market is tending to do. However, let's look at the FANG stocks relative to the S&P 500. And you can see range-bound trading, but definitely under some pressure here, on the verge of testing key support on a relative basis. So again, another key data point to watch. Now, Amazon's been under pressure. That's been weighing on the group, but the FANG stocks generally drive what the market is doing. And if they are starting to underperform the market, that again could be a headwind. We're not there yet. Support could hold, but it's just something to keep an eye on. This is why we watch this stuff constantly, to try to be on the right side of trend changes as early as possible. Now, RSI for the FANG is somewhat encouraging that it has not become oversold on this recent test of the 200-day moving average. But again, still in this consolidation, and the consolidation roughly lines up with the market pretty much being in a consolidation for this entire time frame as well. But I'm watching this relative strength, the relative strength of the FANG against the S&P 500. I'm watching that very closely. How about the Qs, right? So as FANG is under pressure, the Qs are starting to see their relative strength wane. Here's QQQ, right? Testing the top end of the support zone and so far holding above the 200-day moving average. RSI, same as the S&P 500, holding bullish ranges. But what I don't love here is the relative strength. Look at this, a series of lower highs for the relative strength of the Qs against the broader market. Not breaking down just yet, but signs of a descending triangle in place. This is the growth aspect that I was talking about, right? Yield plays and growth. The yield plays are working. Growth had been working up until recently. Now the Qs are under pressure on a relative basis. We're going to continue to watch this closely, but if the Qs break down here, we might have to start thinking about how aggressive we want to be on the growth side of the portfolio. And finally, just in terms of risk appetite, high yield, lagging treasuries. Once again, they tried to rebound. It was a counter trend move, still below the 200-day moving average. High correlation between this ratio and the S&P 500. That's going to wrap it up. Have a great weekend, everyone.